Welcome, everybody. Thanks for joining us for our November Founder Investor Meetup. I'm Michael Mobitz, one of the co-founders of Brandjectory, and with me are my partners, Tom Malengo and Susan Bryington of the Litchfield Fund. We have an awesome panel and session queued up for today.
So Sherry, thank you for being here.
All right, great. Do you see my full screen or do you see it in
Yes,
presented?
we do.
All right, fantastic. Well, it's great to be here. I'm really thrilled to be invited. So, you know, as Mike and Tom mentioned, I work at NielsenIQ and I do what we call total wellness. And so what you're going to see today is what we look at when we say total wellness, which is basically how consumers are thinking about their personal health and wellness. But the reality is it's also this merging of sustainability and social responsibility. So that's why we say total wellness, because it really is this holistic view. What I'm going to do, I talked with Mike this morning. I'm like, I have so much to share, but I promise we're going to keep it really tight. What I'm going to do is I'm going to share a few slides and then I'm going to flip it over to the investors. And then we're going to come back and we're going to do that about 3 times here. So I'm going to start out with some of the not so great news, you know, and it's because we all need to know the reality of the world that we're living in. And the truth is, like, it's getting tougher and tougher from a consumer perspective. You know, a lot of our research is showing that consumers are really tightening their belts. They're struggling. Obviously, interest rates, electricity, grocery costs, and we're starting to see, of course, you know, a lot of behaviors that we would expect, the trading down, you know, looking more for private label, et cetera, but not totally. And I want to talk a little bit with the investors about that, because we really, from a NielsenIQ perspective, we're not seeing this as a race to the bottom or a race to hey, let's all drop the lowest prices. We think there's some still opportunities for premiumization. But in particular, you know, the truth is, this is a look at what we're seeing in terms of CPG prices. You know, we've kind of seen those continue to increase year over year. You know, a lot of those, you know, just in general, we know that this is hitting a consumer pocketbook overall. The other thing that's been pretty interesting that we're watching is that we've seen the average number of items that is starting to trend lower, you know, some decreases here. And of course, part of this is being driven by supply chain issues. Part of this is being driven by SKU rationalizations. Part of this, I mean, you can see that big drop in baby, obviously, you know, the baby formula challenges, right? Like that was one of the big supply chain issues there where we're seeing. But what I will say, and kind of where I think, and I was glad Mike invited me to talk with you all, this is actually an interesting time to be an emerging brand. We are seeing innovations down, and we have a Bases innovation team. We've looked globally. What you can see here is what we're seeing from a US perspective, pretty much across all categories. We're seeing that the number of innovations is down, and you know, a lot of we work from a NielsenIQ perspective, we work with super small brands, and we work with major global brands, and you know, and the retailers in between. And we're hearing from a lot of our big brands, like, we can't innovate, right? We just got to focus and, you know, like, double down and buckle down. But it actually creates, we think, an interesting sweet spot or great opportunity for many of the emerging brands to kind of fill that space. And in fact, our Bases team has done a lot of work where they looked at what happens to brands that innovate during times of distress, and then the ones that pull back. And the reality is, it's probably not a surprise, but the reality is the ones that do innovate, they actually increase their distribution points. They increase their overall share, where the non-innovators actually lose. Now, because we're seeing so many of the major CPG brands kind of double down just on their core business and not innovate, again, we think this is an interesting kind of sweet spot time for emerging brands, where you can actually get a lot more eyes on your product, both from an investor perspective as well as from a retailer perspective. But the one piece on the retailer component that we just want to highlight is, as you all know, like, the time for screwing up, like, it's just shortened, right? You know, launch and learn. The reality is, like, it's really about really understanding who your consumer is, really having very specific and targeted retail programs, and then being, you know, really tight with understanding not just what's happening with your sales, but also really we're finding that it's about deeply understanding, are you not just getting the sales, but are you getting trial? Are you getting repeat? Are you bringing customers back to the category? So metrics, I think that historically, you know, we haven't historically, you know, talked about as much, I don't think, from an emerging brands perspective. And I'm just going to close out this section. One big thing, and the reason that we want to talk about wellness in particular, is we look at all these economic groups, and the truth is, like, the pandemic accelerated a lot of trends, and we saw, there's kind of this polarization from a consumer perspective. We have people that haven't really struggled, right, and they're thriving. And then on the other end of the spectrum, we really do have people that are struggling to put food on the table. They're, really, truly struggling. And we've been tracking these consumers. We track them attitudinal, but we also track behavior. So, like, what are they buying and how's that changing? And then just the one thing I want to call your attention to, there's two things here. One, that gap, you can see that greater percentage of people in the middle in orange. There's so many more people that are just cautious. So they might not be financially constrained or financially okay, but they're just cautious in terms of their behaviors and their attitudes. But the thing that we found across all of these consumer segments, they all care about wellness. And that's why in the second section, I'm going to go into where we think there's some interesting opportunities for you from a wellness perspective. But with that, I'm going to stop sharing and turn it to the investors. I'd love to get your reaction. We talked a little bit earlier, just so everybody knows. I said, if you've got friction or you disagree with what I'm saying, let's share that as well, because I think that's really important for you as brands to hear. So
Sure.
Mike and Giuseppe, Paul, would love your reaction. What are you seeing? What are you kind of thinking from a pricing perspective? Do you agree with me that we don't have to all race to the bottom?
Yes, I do. I first of all, I think you have a great summary there of, we've got some tough hurdles. The inflation is definitely very real. The economic downturn's happening. And as a result, consumers are more cautious. The retailers also, you show about the limited amount of time where they're given a chance to succeed. It's also harder to get in. Category review cycles are being pushed out. It's harder to get in and it's harder to stay in. So it's probably more important, like you said, to have your proposition a little bit more buttoned up than maybe 4 or 5 years ago, where you had time to iterate or really leverage a lot of D2C consumer information. So I would agree with that. And yeah, the numbers show themselves going from cautious to unchanged, from 51 to 65. That's a pretty significant shift in 6 or 8 months or whatever it was. So, and I do think the other point is that it's really time to show innovation and what type of solutions you're providing for both retailers and consumers that are unique and different. Like what are the real solutions you're providing that are not out there, not just a slightly improved Me Too, but a step change difference. And with that, I'll turn it over and let some of the other investors speak.
Yeah, I'm happy to go. So yeah, we've seen a lot of our portfolio brands early on in this kind of inflationary world be scared to raise prices, actually, and get their costs were going up, but they weren't willing to pass that on to down the road. And we had hard conversations. Say, let's do it. Let's see. If there's pushback, let's talk through it. And they come back to us after those conversations and say, oh, they just said yes. They just accepted it. Wow. They're like, yeah, we should have done this months ago, right? So there's room at times to accept the pricing change. The question I had, maybe back to you, around the innovation, and I know Mike is in my space as well here in the alcohol space. One thing that's a changing sort of dynamic in our space is, so the 3-tiered system in alcohol has the distributors selling into the retailers, but the distributors are becoming more automated and tech kind of enabled. So there's less ability to innovate and put innovation in, and the buyers are doing more of just buying the same old, what they know, and there's not that the salesperson there sharing with them, I have this innovative product X. So it's harder to get that. While it could be a great product and would sell well, it's harder to get that sell in because of the automation that's going on in the space. So I found that as an interesting kind of takeaway from your part of the program.
Yeah, I will tell you
just
one
to
thing.
add. Oh yeah.
Go ahead. No, please. Go
Yeah,
ahead.
just going to add a little color to that. I totally agree. When you're talking about the limited the number of SKUs have decreased over the last year. And we touched on it. I actually see a lot of it having to come from the local departments are being gutted. We see what's happening at Whole Foods. We're all aware. A lot of the local guys are being promoted to the global marketing department. And in my conversations, just with some of the guys over there, it would be more difficult. So to your point about innovation, guys, well, if there's no local program, how do they discover the innovation? So really, it's the innovative brands that are well funded. They may get the attention of the buyers, right? Because there literally is no local programs at all. That's what I've been being told across the board. So yeah, it's going to be less of the innovation going forward. That being the case, guys, I do tours every month where I actually take a buyer throughout New York City and introduce them to New York entrepreneurs. Well, you know, John Lawson from Whole Foods, I did it for Queens. I want to bring it up here. Hey guys, if you know someone in the Bronx that I should go discover, on December 9th, I'm taking John Lawson around Bronx, introducing them to entrepreneurs in the Bronx. I want to bring it up to you guys. If you come up with someone in the Bronx, let me know. I would love to make their day.
Great. All right, I'm gonna, Michael, I will make sure you'll get the first round on the next one. So one of the things we wanted to do is we also wanted to share like where we think there's growth opportunities. And so we've done a lot of research at NielsenIQ. Obviously the pandemic, it didn't create any of these wellness trends, it just accelerated a lot of them. And so what I want to highlight for you today is like, what are the big things from a NielsenIQ perspective that we're watching that we think as you're preparing for your investor meetings, as you're thinking about your innovations, as you're talking with retailers, like we think these are the areas to kind of really be thinking about, like, am I meeting this consumer need? So really high level, when you look at this, think of it like Maslow's hierarchy flipped upside down. So base level, like, am I safe? Am I alive? Am I well? Frankly, we all dropped to the bottom of that if you remember the beginning of the pandemic. As you go down the pyramid, it starts to be a little bit more, you can be a little broader, right? You're starting to think about expanding what you think of from a wellness perspective, thinking about your future, thinking about innovations, and then all the way to the bottom, like I mentioned, this idea of selfless care, that it's not just about me and my family's health, but it's about the health of the planet. So I'm going to tell you what we think, and then I'm going to show you just a few slides of like how this is coming to life. A few things that we're really thinking brands should be paying attention to. So one, the pandemic really shone a spotlight on comorbidities. So, you know, if you think early on, 40% of the people that died had diabetes, you know, with COVID. So it was that commingling of those comorbidities. And it really just shone a spotlight on obesity, diabetes, heart disease, product formulations, sugar, sodium, carbs, the FDA coming out, trying to come out with their version of what's healthy. This is going to be more and more critical. We're just seeing so many shifts in product formulations around added sugars, types of sugars, et cetera. So if you're in the food space. The second area under self-care, so, you know, again, this expansion. So it's not just the ailments, it's also digestive health and mental health and, you know, brain health. Food as medicine, we're really, really seeing this blow up in our data. And we're seeing a lot of like intermingling of like how people are treating supplements and food. So this idea, again, that really leveraging food in a very, very different way. Preventative, thinking futuristically, a lot of this is we're really, you know, again, clean label, no artificial colors, no artificial flavors. Consumers are seeing this across the store in their food products and their beauty products. And part of what's going on here, we think, is that it's that one area where you can have a little bit of control in a place where you don't have a lot of control in your life. Plant-based, it's a mixed bag. You know, we're seeing growth in certain areas. We're also seeing some slowing of that, but it's definitely, we think, a secular trend. It's just I mean, the truth is, some of the products just aren't good, right? Like there's trial, but there's not repeat in some of the areas. But we know that consumers have a high level of interest in plant-based. Healthy aging is something I will tell you, as an industry, we're always looking for young. What are the young people doing? And I'll tell you what, they are interesting, and they are, you know, doing a lot of cool trends, like they're interested in sustainability, but there's not a lot of them, right? And they're not having kids, and they're getting married later, and they're actually changing of a lot of our categories that we've historically, you know, been family categories. Well, at the other end of the spectrum, we got these boomers who are living longer, they're hiking Machu Picchu in their 90s. They are changing categories. And so brands that are really can kind of support that, we think there's even more of an interesting long-term opportunity. functional ingredients, adaptogens, superfoods. This is mostly clients always tell me, like, just tell me about this stuff. This is the fun stuff. It is, right? This is like the collagen, the CBD, the ashwagandha. This, we're really seeing such a level of sophistication from consumers, not just that they care about ingredients, but they really understand what the ingredients are there for. And then the last area I'll cover is the diverse social responsibility, diversity, equity, and inclusion. So I'm just going to quickly show you these slides just to show you like that this is real. Diabetes, we are seeing more and more brands that are not diabetic brands that are talking about diabetes on their websites, on their social media. We're seeing consumers searching. As I mentioned, we're seeing product formulations. Same thing as I mentioned, this whole free from plant-based, this is what you can see across the bottom. This is the number of categories that these claims are in and the growth that we're seeing versus 3 years ago. So again, and the size of the bubble is the size of them. So again, we think that these are, really kind of key areas where you can, where it makes sense to really play from a product perspective. Plant-based, as I mentioned, this one, like I said, it's a mixed bag. One of the big things I think that we're kind of watching is like, oh my gosh, plant-based is showing up everywhere. It's showing up on every package. And I don't know if many of you remember when the gluten-free showed up on water and we kind of all were like, oh, I think it's jumped the shark. The reality is there's a potential, because we're seeing so much of plant-based as a marketing claim, that it will dilute, when you've got plant-based tampons and diapers and nail polish, like all of a sudden you kind of are like, but that is, definitely an area we're still watching. And like I said, we think it's a long-term trend. And then the last area in this section, like I said, is that healthy aging. By 2060, 40% of our population is going to be over 50. And when you've got Martha Stewart blowing up the internet, and you're seeing a lot of brands that are actually formulating products specifically for this aging group, we think there's, again, just a lot of interesting opportunities for brands to play in that space. And so with that, I'm going to turn it back over to the investors to give a little perspective on what you think of those trends. And Mike, we'll start with you.
Sure, yeah. So I guess first off, I would agree with pretty much everything you just said. I mean, in our space, so we're in private equity and specifically in BevAlc, we're seeing all of those things almost on a daily basis now. So premiumization is sort of the bolt-on from the previous segment to this segment of the presentation, but it's a bit of, in my opinion, a strategy around price insulation. So, you've got brands that are going to have to go to market with a higher price for supply side reasons, and premiumizing and going the better for you, route is a category in our space that people are willing to pay more for. Definitely the all natural CBD. We're seeing functional beverages, THC, CBD. That's a big hot button these days. Definitely like in the ready to drink category, anything in a can, in seltzer, has at least in their forecast, some version of functional beverage forecast. And also in the non-alc sector, folks that already have a non-alc in the market can bolt that on and achieve a more premium price point too. So yeah, I mean, long story short, we're seeing all these trends live on the field currently, and there's definitely a lot of strategies on the field to capitalize.
Yeah, I'll chime in. I think the wellness needs that you identified are great. And I think a couple I didn't see on there that I see like getting tremendous like price in the marketplace is around immunity. You think about some of the wellness shots getting $4 for a couple ounces. Also like the hyperhydration, I'll call it, the liquid IV, more BioLite. These are demanding very high price points. That means that consumers finds these to be innovative and offer real solutions. But I'd say as you look through all of those, one caution is that you need to have real clarity and simplicity on your messaging on the appropriate use occasion and benefits. If you're trying to be too many things, you'll get lost and you'll get stuck in the middle. So figure out what your niche is, what your, who your tribe is, and how you best connect with them in the most simple, straightforward, memorable, and galvanizing way that you can. And then the last thing about that senior community, the strategic beverage companies are very interested in figuring out brands that connect with those consumers. Is the Cokes, the Pepsis, the Keurig Dr. Peppers lose a lot of their core audiences as they age? They're not having an easy time replacing that consumer, and the demographics and the economic power of that group is amazing. So the demographic trends totally support it. So it's a huge call out.
And the one thing I'll also say was kind of on there, but I think it's an interesting kind of parallel or maybe added piece to it is there's a lot around all these different functional pieces, and we're a believer in that. Mike brought it up, we're an investor in Can, the leading THC infused beverage out there, the microdose space. But I think a lot of what is underlying all of those things is transparency, right? Like people kind of want to know what it is on the other end of it, whether it be where it came from, where products were sourced, what's in it, like, because then they can make more informed decisions about, it's important to me to have low sugar. It's important to me to know where this is made. And so those types of things really resonate. Like we see trends like tequila is a very fast growing trend. And I think a lot of that has to do with people can connect directly to, I know this comes from this particular area of Mexico. It comes from this particular plant. It's not some kind of voodoo that comes out of a lab that I don't know exactly what it is. So I think that's a piece of it as well that really resonates with consumers.
I love that, Giuseppe. It's a perfect lead into the next section. Although, Paul, I will say you nailed it, right? It's immunity, it's hydration. The other one is energy. We continue to see energy, but it's not energy from caffeine that consumers are looking for. And it really is tied to like, what are different sources? What are natural sources? But yeah, you absolutely nailed it in terms of kind of those functional needs that we're seeing. And then, like I said, the digestive health, the mental health, the brain health and clarity, that sort of thing. Giuseppe, the transparency piece, I think the perfect lead into this last section, which is, we are seeing a lot of growth around this umbrella of sustainability, which for us, we track 90 different attributes around this, everything from social responsibility to the environment, to the packaging, et cetera. And again, kind of orienting you here. This is, showing you how penetrated this across the store, the size of the bubbles, the size of the sales, and then the growth is there where it is on the vertical axis. And, frankly, we've got a lot of clients that are like, yeah, well, will consumers pay more for it? Or is there, where can we do a premium? We just wanted to show you, to Giuseppe's point, like we're really starting to see this interest from consumers around, I want to know how this was grown. I want to know how it was produced. I want to know how it was manufactured. What was the impact on the climate? What was the water? And so these are the types of claims that we're starting to see. And you can see where we're seeing growth that's above the rate of the total store growth. The dotted line is the growth of the total store, and then below the total store. And, you're seeing interesting things that are starting to pop up there, right? Like regenerative agriculture. Again, it's not in a lot of categories yet, but really strong growth. Water footprint, emissions. So these are the sorts of things that we're seeing brands that are claiming on package, and consumers are, in and out, day in and day out, actually, saying like, yeah, these are my values. I want to buy my values. So I think Paul made the point though, it's always the caution of like making sure with all the claims on pack that it's not the NASCAR of packaging, that you've really got the most, relevant claims for whether it's the functional benefits or whether it's, the transparency benefits, but, having those, the most relevant for your consumer, for your product. The other piece I wanted to highlight is that, under this umbrella, we're seeing this idea of social responsibility. So women-owned, LGBTQ, fair trade, really strong growth here. You can see in minority-owned brands, this is definitely becoming an area, again, where consumers are day in and day out, like saying like, yep, I'm going to actually buy and shop my values. We've seen some interesting things. I know you saw B Corp on the previous slide. We've seen some interesting trends around B Corps growing faster than other emerging brands. And the kind of some hypotheses around that are like, is it because they're just managed better, like better accountability? What does that look like? We're not, more work to be done there, but some interesting growth in that area. The last piece I just want to highlight for you, because I think this is so key. Diversity, equity, and inclusion obviously falls under this umbrella of social responsibility. And we, of course, we want to have, diversity in our companies and diversity in our boards. That one of the things that we've been positing to the industry is, shouldn't we be judging ourselves by how good we're doing in terms of serving the diverse marketplace that we have? And so what you see here, we took a look at the top 20 major CPGs. We took a look at 20 independent CPGs, and we basically said, how well do you represent the US? And the reality is, if you look at this, we're still too white, right? We're over skewed from a white perspective. And then what we did is we basically said, well, it's not just about like, this is kind of a nice to have. When you think about population growth slowing, this is where your growth is actually going to come from. So we took a look at the brands that were most diverse. So nobody looked like the US, but the ones that were most diverse. And we found that they are growing faster. So really, again, just trying to not build out that business case, that it's important for us to not just look at, are we diverse inside of our companies, but are we also meeting the needs of diverse audiences? So with that, I'd love to throw this back over to the investors and get your reaction on some of those topics.
I can go first, I guess. So starting backwards, forwards, there's been a lot of, I'll just give like one kind of example, right? There's been a lot of around like low calorie, low sugar, like in a lot of drinks, and White Claws and stuff had a great kind of moment. But there's also now becoming like a groundswell of like Asian focused flavors, Hispanic focused flavors.
Sanzo, yeah.
That were like, they maybe have a little bit more sugar, maybe a little bit more kind of to them, but they're not only appealing to that demographic that's growing per your slide, but also to people who want to explore that, who are kind of adventurous sort of users. And like, I am not Hispanic, but I like Hispanic things, right? I am not Asian, but I like, and so those people, those are growth areas that I'm seeing like a little bit of a pushback from, just like all the way to low cal, low sugar, all that to these things that are maybe more aligned with a specific sort of tailored to a piece of the population that is not just for them, but could be consumed by the larger, as opposed to the larger, the minorities having to use something that was tailored to somebody else. It's kind of the reverse, right? So very interesting.
No, good point. Just to add to your point, you figure 90% of Black Americans and Asian Americans are lactose intolerant. So you can imagine the potential growth in the future of plant-based milks. And the reason that you don't see it at bodegas and a lot of places, it's not as affordable. Whereas if it were, I think the growth there is huge. I also wanted to ask something you mentioned earlier. Hey guys, tequila and mezcal, is there a preference? Is it mezcal? Are they similar? Or they have a chance? I know tequila comes from like one plant, and mezcal you can make from many plants. Just curious, because you mentioned tequila, not mezcal. Are they both high potential?
They're both growing very fast, yes.
And I have to admit, the reason I'm asking it in 1 hour, my client is Run the Jewels, the group, and they're launching their first mezcal. And we actually have a call. And so I help brands, help businesses and entrepreneurs, help them launch and create their own brands from scratch. And so I was just curious why they went that direction, not tequila. So thanks.
You bet. I'm going to steal Giuseppe's line on alignment. One of the things that we see that Sherry just spoke to on the diversity end of the spectrum is a bit of a lack of founder alignment on, I'll use an example, like female-focused brands that are not run, or at least having some kind of executive leadership representation from their audience being female. So I would say, if there happen to be brands in the audience today that are gearing themselves, let's say, to the female audience, they should have female influence at the top of the pyramid. And if not, that's a bit of an accountability issue that leadership needs to address prior to going out and raising funds, certainly, or the overall brand messaging seems to fall flat, at least in our experience.
And just to add to Mike, I'm a general partner of Caminus Ventures, which is an accelerator to help Black food and beverage entrepreneurs. So we're in the middle of the raise. So this summer, what we did was we launched a pilot to your point, it's the most challenging thing I've ever been in my life, to be honest with you, regardless of the relationships, trying to raise capital for, underrepresented groups. But what I do find, to be optimistic, I've developed some incredible allies along the way. So I didn't know how difficult it was. Now I do. And as a result, that's why I started those tours, guys. I realized if less than 3% of all venture capital dollars go to women and minorities, that's not going to change that much in my lifetime. So therefore, I'm just focused on trying to figure out as much as possible if I can open the door for brands, whether in Hudson Group I represent, Whole Foods, things of that nature. Because the truth of this, those purchase orders are the capital investment most of these brands are ever going to get. So that's the direction I've been going in. Yeah.
I'm going to jump in here now. We just have about 5 or 6 minutes left before we have to break into our small rooms. I want to thank Sherry and everyone for their comments. I want to take a moment here to open it up to any of the other investors. If there's a comment that you'd like to make about anything here that we discussed that you think is important for brands to know about what's coming in 2023, we'd love to hear from you. So, Bruce or Bob or whoever else is on the line, please, if you have something to say, could you jump in?
Well, unless Bobby, you want to go? You always say better things than I.
Bruce, I can't hear you real good.
You cannot hear me?
Yeah, there you go. You're a little clearer now. Thank you.
All right. I just want to say that I've lived through a lot of recessions, depressions, and some pretty hard economic times in the natural specialty business. And without the data to back it up, I can guarantee you people trade up. They trade out of restaurants. They trade up and cook at home. They buy better ingredients. So all is hope. I think we're coming, not that I'm an economist, but I think we're going to get rough again. I can tell you, these are things, sure, they trade down to private label, but private label is a lot higher quality now than the 70s and 80s. But it's something to hold on to. It is going to get tough to raise money if the market keeps having its crazy days. I think that's going to affect you more than anything else. And I'm sure it's no surprise that the strategics and buyers out there looking for a whole different model. I think. So in terms of profitability, retail, I'll leave it at that. Thanks.
Thank you, Bruce. Any of our other investors have a comment they'd like to jump in with?
I'd love to jump in with a comment. Hi, it's Joe Tamer. So we have a lot of experience with Latin American companies where inflation's a big deal. We've been dealing for years. I think, Sherry, the build I would have is on your first slide where you have the price increases. And just to give all the founders here on the call, just look at the broader set of tools that you could use to deal with inflation. And there's a really broad package of changes and actions that you can take, from innovations to price pack architecture, different angles that you could use to work to deal with inflation and to deal with it smartly in a way that generates value. It's also an opportunity sometimes to upsell. And so there's a lot there to unpack that. I think Sherry went really quickly through it, but there's a lot of value in exploring that part and not thinking about it unidimensionally as, oops, I have to do pricing and just increase the price of my unit. Think about it as a price per pack. Think about how you configure your product. Think about your usage occasions. And there's lots of ways. Even in using the trade promotion efficiency, you might have to promote a little less, and that's a way of getting some pricing in. So there's a lot of tools that you could use there to drive value in these moments, and they could be an opportunity.
Thank you, Joe. Any other of our investors? Any comments? Sherry, do you have any final comments before we allow Michael to put us into our breakout rooms?
I would just say that, this was pretty quick, but if anyone has any, I know we would have a breakout, but if anyone has any deeper questions on any of the topics, just let me know. We've got a lot of content and we'd love to share it and give it to you.
Thank you, Sherry. And I just want to thank you for being here. NielsenIQ has been a big supporter of Brandjectory so far. We love the fact that we can work with you folks and bring some of that knowledge that you accumulate, bring together, put together, analyze, that we can bring it to our community here. So we want to thank you for being here. Want to thank Paul and Mike and Giuseppe for being part of this today. And